Welcome back. In this second section, we are going to focus on, um, on the role of financial management in different organizations, especially in sport organizations. We will pay focus on the different roles and functions of financial management. After you have gone through this section, you should better understand the financial management role in organization. You will watch this short video, and after going through the video, you will write a short essay or mini case study from your organization or some other organization's financial management plan. The plans that you will write are all uploaded to this course discussion section. Then you will evaluate each other's plans and learn this way by doing. You will get a wider information about the task in the later part of this section. But first, let's learn where are you going to focus on in these essays that you are going to write. Let's start with the question about why do we have such a function as financial management in organizations? We learned in the previous section that financial management is about planning, controlling, and administrating the organization's funds. As the term financial management refers, this often is a task of the financial managers. In corporations, this is obvious, but in sport organizations, especially in smaller sport clubs, it's quite usual that there is no financial managers. Let's reverse a bit and think about management and leadership as the key roles and functions in every organization. Even though you would be the only one in the organization, you should either lead yourself or lead volunteers. And if you think about managing, you would in any case have to manage the organizational processes. Financial management is basically just one management process that needs to be taken care of in every organization. We have too many examples from sport organizations where the focus have been in all the other aspects than financial ones. At least in Finland, we have those examples. Too expensive players, too expensive investments, too expensive, you name it. Or other way around, too less revenues like participation fees, tickets, or any other revenues. Not everything is possible to forecast, but most are. Financial management is also about forecasting the flow of funds, forecasting the future, the flow of funds in the future. Like all the other management processes, financial management is just one of them. If you would ask me, it is probably the most important one, but I assume that this is dependent on who you ask. It is just one process, but it is very important one. I would say that in the world we live in, money or funds in general are running the world to at least some extent. Shall we split the financial management task to smaller parts, as we learned? Planning, controlling, and administrating. Planning is basically looking to the future, right? It's quite obvious. It's about estimating financial requirements in the future. How much we are willing or going to spend or invest on whatever it is about. Are we going to have more or less funds in the future? Are we in need of liquidating some assets, or are we going to be able to turn money on other funds? It is quite easy to understand what we mean by planning, right? It's quite easy. Planning, looking into the future, estimating what is going to happen. We plan our own finance in our everyday life. You probably have some kind of financial plan made for yourself. You might consider what is your short-term financial decisions. Let's say you buy a bread or milk from the grocery shop. That is really short-term, and actually that is something you actually need. Midterm could be something like having savings for your next trip abroad. You would like to experience something new. So you plan how are you going to use your funds in the midterm. Then you might also have a long-term plan for your funds. Let's say, for example, you want to buy a house or apartment, so you plan the use of your existing and estimated future funds. So you have short term, which is actually something you need right now to stay alive. Then you have mid-term, which could be something to experience in the future. And then long term, if you want to buy a house or do some bigger investment. Then you make a plan about your existing and estimated future funds. And then you have a plan to follow. This is quite obvious. Organizationally, the financial planning process is the first step for taking care of the funds. All the organizations should have a plan for planning process. So you need to plan how are you going to plan your fund using. It is quite easy to plan on the paper, right? But it's not that easy to do it in practice. At this point, I would like to say and underline that financial planning is not a one-time task. It's not something you do once and that's it. While the other conditions vary, the future insight will change as well. If there is some changes in the environment, where are you doing your organization's tasks, it will change the budget as well. The budget is one plan, but financial management is also about planning all the time. Long-term plans, mid-term plans, and short-term plans are all important. It is important that the planning process is described in the organization. It should match the organization's financial situation and volume. If the organization is organizing, let's say, one major event yearly and otherwise there is basically nothing happening, the planning process is quite different from the organization that is having volume around the year. And the organization that has more funds should have a different plan than an organization which is would be almost bankrupt. The long term, mid term, short term, it varies a lot. If organization is having a good cash flow and great amount of funds, the planning process is quite different from the organization that is running with low money. Are you going to plan yearly, quarterly, monthly, weekly, or even daily based? The last one, the daily base, is quite uncommon, but it's possible. How often are you checking and updating the plan as well? This is all dependent on the organization situation. But I am saying this again. It is important that there is a process for planning and the plan is made. I have a brief example from our organization. The budget is made on a yearly level. It is updated on a quarterly level, so in every 3 months. Certain events are planned separately from the all-around budget. And the plans are to be updated in every time see necessary, usually in organizing committee meetings. So there are some major events that we organize that have a different budget, and the budget and the plan is followed in different ways. The funded trusts are planned. This is the example from our organization still. The funded trusts are planned on Insight forever. So we have those trusts and the Insight is forever, which means that there is a plan and it should not change at any point. This was an example from our organization, but as I said, it's dependent on the organization situation. Once again, the plan for planning should be written down and described, then it is easier to follow. And this is something that we need to keep in mind also when writing the essays, right? The financial management, the financial plan should be written down so it's easier to follow. Then it's not only here, but on paper so that everybody who comes to the organization can find it. It is one thing to plan, but another thing to control the funds. Planning is easy as it is just a plan, but controlling the assets is another thing. Controlling includes more about following the plan. Controlling the assets is a way to follow the plan. And this is something that is really important for financial managers, that they need to control the funds, they need to follow the plan, they need to make sure that everybody in the management boards, CEOs, whoever knows the plan. And you, as a financial manager, you will do the controlling process. As said, the plan is just a plan. Controlling the assets is important for financial manager or the manager responsible for managing the funds. It's not always financial managers, as we learn that most of the sport organizations, especially the small ones, do not have different tasks for or different job as financial managers. Usually, financial management is based on various control techniques, the controlling part, which are basically some key figures that managers use as a decision-making tools. Easiest one is, of course, comparing the budget to the actual recordings. Let's introduce some others as well. So easiest one is to compare your budget and your ongoing situation to each other. We will learn about this later on this model. But let's introduce some others as well, some other figures. Return on investment, or ROI as it is shortened. Return on investment. When you have made a financial plan, you might consider which way you will get the highest return on your investment. We will look on the investments in the last part of this model, but let's check something about it. In organizational level, it could mean an investment decision. Should we buy a new machine to fasten the factory process? If we once again try to understand this in personal life level, should I buy the cheaper milk as it probably gives the same output as the more expensive one? So when the price is lower, but the benefit is the same, it gives you higher return on your investment. It's not a huge investment, but you make the investment decision every time in grocery stores. Something else that financial managers use, different sort of ratio analysis. Most used one is the profitability ratios. Let's keep it simple here. It means a proportion of profit the operation generates. If you sell a product, how much you will earn on it. This could be negative as well if you sell products on a price that is less than your investment on the product. The ratio is calculated like this. The profit is divided by the expenses. If the ratio is more than 1, it is profitable. And if it's less than 1, it's not profitable. There are other ratio analyses as well, but here we keep it simple now. I just want to let you know that financial managers, financial controllers, management team members, CEOs use different kind of tools when trying to control the money flow. It's pretty hard to find an example from your own life when you consider the profitability ratios. So let's not go there. Then there is one. Break-even analysis is a typical tool for financial managers trying to find a point where the process turns profitable. It basically means that you calculate the point where the costs and profits are the same. Usually there are some fixed costs and variable costs for the product or service. You will find more information about this from the course material, but this is just something short to let you know. Now we understand some of different techniques for following the plan and evaluating the financial situation. And I have to say at this point that it is difficult to make a difference between controlling the assets and administrating the finance. In some of the literature, financial management is only described as planning and controlling the funds. So don't get too much stuck on the terminology as long as you understand the core of the concept. So planning, controlling, and administrating, or just planning and controlling the finance. Controlling the assets includes the proper cash management. In the last part, we will learn, in the third part, you will learn about cash flow management. But controlling the assets includes the proper cash management. You need to make sure that there is enough cash for keeping the business running. You sell products or services to provide cash. Sometimes you need to liquidate some of your investment funds, and sometimes you take debts, short or long-term ones, to make it possible for the business run and have a proper cash management. Once again, let's try to find an analog for your personal life. You have a plan for managing your financial situation. You have now estimated your future profits and losses, so you have a plan to follow. And the plan has to be updatable and updated during the time. Now you need and want to control the financial situation as well. You consider whether to make an investment for buying your own apartment. You might calculate how much loan you can afford. You might use break-even analysis, how much loan you can pay compared to your rent at the moment. If you take a loan, how much is the total amount if you pay it monthly as much as your rent is at the moment? So you compare those investment plans or even plans and do it for yourself in your personal life as well. We don't do it in a same way that corporations or even sport organizations do, but you do it somehow at least, or at least you should do it. So let's check what we have learned this far. Planning is a key starting point for financial management. We understand the main concept of planning the finance. Controlling is basically following the plan. And there are various techniques for controlling the finance. But the techniques are just to help for getting a better understanding of the situation. This is important as the gut feeling is the worst way to manage finance. Now we still have to talk about administrating the finance before letting you to start with your own financial management plans. As I said earlier, controlling and administrating the finance are a bit of the same thing with some twist. Let's make a very, very simplistic difference. Controller or controlling does not make decisions. Administrator makes the decisions. This is a very, very simplistic approach, but it just shows the difference in a very simple way. So, controller does not make decisions, administrator makes the decisions. In corporations, there are usually a financial manager who is responsible for the management and is usually part of the management team as well, as you can assume when the name is or the title is financial manager. Then there are also financial controllers whose main job is to create information and use controlling tools to provide crucial information to help managers' decision process. So manager and controller. Manager is an administrator and controller is controller. In smaller companies and in most of the sport organizations, the situation is a bit different. It might be the CEO, Chief Executive Officer, who is responsible for providing the financial plans, using controlling techniques to provide information, and then administrating the decisions and mainly reporting it to the board. In smaller companies, in smaller organizations, especially in sport organizations. It is very dependable for the size of organization, which the goal of organization and the processes of the organizations are. So, I think we are done with this video lecture. Now, you are going to finish this section with the mini case study and essay. So, assuming that you are part of some organization, or at least you have been chosen for this EUACA learning path by some organization. So, please contact the person in your organization who you assume is responsible for financial management. Then interview him or her and try to describe the financial management plan as precisely as possible. Then spend one part of your case study for evaluating the financial management plan status. So you check the plan and evaluate what is the situation of the plan.